And I'm, the only thing, and you probably heard me saying, is that right now the audit is in draft form, and I've printed it double-sided to save paper. I will provide a final copy, but I'm waiting on the local government commission, who seems to be way behind this year on putting out the information they typically put out to assist auditors in the preparation of financial statements. So I'm waiting on their approval of your report. I have loaded it, and actually twice, to their old portal, their new portal, and all that kind of stuff, and we just await their blessing on it. And I don't anticipate them changing anything. If they were to change anything, here's a guess that I might have, or that I have, that maybe something they would change. I have that you have no statutory violations, which typically are budget overages, but we had a teeny bit of overage because of the new, that new debt that, remember, just a teeny bit, but to me it was immaterial. I deemed that immaterial, well below any kind of materiality limits, and it's just because it kind of popped up, and I guess it was on, it's on the Tallulah Creek water plant. That was, the plan is completed, as I understand, but not in service yet, because there's another grant that has to be undertaken, and construction, in order to make that plant eligible to become online and actually cleaning water and all that stuff. So that, you'll notice in the when and if you read through the financial statements in the management discussion and analysis, we talk about that the plant is complete. I had initially said it was put into service. It technically is not yet in service. It's just sort of sitting there ready for phase 2 and the money to come, and that construction to happen. But these letters that you have, so you've all got 3 letters here, and these are typical letters that we issue with our audit. The first one, here says significant audit findings. If you see it on the first page, that is what we call a letter to those charged with governance. That's you on the board, and it basically just tells you what an audit is about. Any difficulties we may have had, and disagreements with management, representations by management. So it's a standard stock letter, and I'm pleased to say that we didn't have any difficulties, no disagreements. Steve and Sonia represented the management representation letter to us, dated August 6th, which is the date of the report. That they provided us everything, and gave us all the minutes, and talked about how there's no, everything's in compliance, there's no fraud, and on and all that stuff. And the only thing, you might see corrected and uncorrected misstatements. We had some adjusting journal entries, just your typical entries for depreciation. I'm trying to think, we had no payables. I mean, let me just commend Sonia here for doing an incredible job with the books. It's just a pleasure to come into an engagement, an audit client, and have everything ready at our disposal. The books were clean. I mean, how many adjustments did we make? There's just minor stuff, right? I can't even remember what they were.
Probably 5.
5, yeah. There weren't many adjustments. And even I had a new staff member with me, a little girl of Cuban descent, Roxana, and she even commented, because she's been on a couple other audits, and she said, boy, this was so nice compared to, having to, wait 3 days for a request to come through. And anyway, so kudos to Sonia for making, the audit go smoothly, and getting everything we needed, and also having it ready so early in July. So that's why I'm a little earlier this year. We're just trying to get all of our things get out of the way, and we all have, there's so much going on with, it's like Sonia and I are on board with getting things done. We need to get the LGC somehow on the same page, right? So then you've got another letter, which is, this is a letter, we call it the SAS 115 letter, and a SAS 115 is the audit standard talking about material weaknesses and significant deficiencies. And in the past, your audit rose to the level of what was called a yellow book audit, meaning that there was government spending in excess of $100,000 or spending of government grant monies of sorts of $100,000. And usually that was a little bit of PAL bill money combined with some grant money going on. Like in the past, it was the Tallulah Creek water plant project, and that was federal grant money. Well, this year with that plant being substantially done, I think there was just a little piddly amount of $20,000 that came through, and then less than $20,000 of PAL bill money. Your audit did not rise to that yellow book level, so that meant that the significant deficiency, which is essentially lack of segregation of duties because you are so small, and it's the comment we make year after year after year, just because you'd have to hire another person in this office to really properly segregate everything. And I don't think there's anything wrong or going on, improperly with just Sherry and Sonia in the office. You've got Steve signing a lot of the checks, and Sonia does a good job when she's not comfortable signing something, she makes someone else sign off on it. So, but we still have this comment just because you're a small government with a small size staff. So, but this letter is separate because in the past, when it's a yellow book audit, the yellow book report is part of the bound copy of the report, and the segregation comment is usually incorporated into the finding of the yellow book, if that makes sense. If you were to pull out an old audit report where we have a yellow book audit going on, the segregation of duties comment is still in there. It's just in this bound version of the report. And this year it's not, because we don't have an extra report in the back called the yellow book report. So that's to explain that, if you all were curious why I have an extra letter. The last letter is our management suggestions. And so every year, we might have something that isn't real significant in terms of dollar amount of significance, or let's say it's not a material weakness in terms of internal controls, but just things we want to point out that we saw during our audit. And the first one was on employee time cards. We're just, and I think y'all know what I'm talking about in this one. We just pointed it out because it's an event that did happen, and just pointing out that payroll is a large expense. Accurate time cards are important, and the board, I think, informally is approving how payroll is being handled for this one employee, and our suggestion is just that maybe it be voted on for a formal approval. Maybe you already have done that. I don't know.
We did.
Okay. All right. And
No
that's
fraud.
No,
right. No, we didn't.
No
We didn't say there was any fraud necessarily.
The time was correct.
Okay.
Yeah.
Okay.
He
So
worked. Yeah.
so anyway, so good. You've already formally discussed this at the board meeting, and that
they
was
have
me.
not discussed this formally at a board meeting. No, she's just probably talking about something in closed session, but it
Okay.
formally means in public so that the town can hear.
Okay.
Yes, that's what formally means.
I didn't think you were supposed to discuss someone's time in the public. But we did discuss it. Our attorney had told us that.
Okay.
Yeah.
Yeah. Well, personnel matters, and Ellen's not here, I guess. Certainly personnel matters, right, would be a closed session
Right.
finding. This is more just from like what we're doing as auditors, coming through and just saying, okay, a time sheet or time card didn't exactly meet, and we did talk to, we saw Bud and talked to Bud, and I know he's, how old is Bud? 90?
He worked.
He worked.
Yeah.
And anyway, our overall finding, and like I said, it's really insignificant from a dollar point of view.
And I think at the same time that you thought that he wasn't supposed to be being paid by PAL bill money,
Well,
and that's what we done
yes.
that swap from
Yeah.
where he was being paid out of PAL bill money over to
Right.
agenda of whatever department that was, and that was
Yeah.
just basically a line item thing,
Yeah,
right?
and that's actually something that did come out of it that was important.
Yeah.
That
We discussed that
Yeah.
too.
yeah, the PAL bill doesn't allow like street cleaning And luckily you had enough other expenses to cover the 16,000 or whatever. You don't get a whole lot of powder money, but 17,000. But those other amounts that did qualify were adequate to basically show that you used, I think you used all the 500 and however many dollars I had, just a small amount, 500 and it's in the reserve cash, just a little bit of reserve cash for power bill. So some good came out of it. We fixed the report and reported properly and tweaked that, but
I think the way you explained to me was the deficiency was that the timesheet didn't agree with what his conversation was when you asked him how many hours he works.
right, that is true. We did actually ask him how many hours he worked. He's hard to understand. I know he's elderly, and I guess the overall feeling I have is I know you're trying to help him out and keep him busy, and we just suggested that you just formally say, okay, if we're gonna pay Bud, what is it, 20 hours a week?
16.
16 hours a week, that's fine with me. Just maybe let's just put it out there. But if he actually, works that or not, he's getting sick. Maybe that's his kind of, benefit pay for being such a long-standing, dedicated guy. But just formally maybe talk about that. So anyway, yeah. Okay.
We was just advised, you don't discuss things like that in the public part of it.
Right. Well,
But
and
we did
certainly
have our meeting and he wasn't found guilty of fraud.
right.
And,
And letters backing up that from citizens out here that
It's on.
they'd seen him working. No.
Robert even brought up, Robert, you were talking about this employee time card recommendation, is that the hours that employee work should agree with the hours on the time sheet. That's right. That's what it is.
I mean, who can keep up with the full 16 hours that he works a week? I don't know of anybody that follows Bud around for 16 hours, but I'm gonna take it that he works 16 hours. He deserves at least 16 hours.
He told the auditor they did. That's what was it? She's made her report on
Yeah, and we did look at his time sheets.
Yeah, he told the auditor he worked a couple hours a day.
Yeah.
And that's what should be reflected on his time sheet unless the board wants to override that in a public meeting.
Okay, well, we will.
All right, and then the next suggestion was, again, just this is a repeat of last year. Still, I'm not really clear on the dollar value of the water sewer maintenance inventory. I did not go back out there again this year like last year to view it, but just a suggestion that, again, a count would help firm up internal controls over, items being purchased and put into inventory and then items being used. I mean, I'm not accusing anybody of taking anything, but you just never, it's just a little bit more of a solid control over the items. And then also it's just a nice way to kind of keep track of obsolete material. If you have obsolete stuff, you wouldn't count that in your inventory, but it's just meant. This is meant to just be. Both of these are actually just meant to be helpful suggestions. They're not critical findings or significant from dollar points of a dollar amount. The water sewer maintenance inventory. I mean, I don't even know what the dollar value would be. I'm guessing it's under $30,000, so that's not a huge amount in the scheme of things here at the town. But
I would
really,
say it's well over 30. If
Oh,
I
you
had to
think?
guess, I would say that's 55. I know last week he ordered 9,000 in supplies, and I know if we just do a walkthrough like we did here
Yeah.
before, his pipe alone is going to be probably around 20,000. So,
and was the pipe ordered for a project or just to have on?
no,
hand?
the ones that just sit out.
We
Oh.
goes,
Those PVC pipes.
we try to keep a minimum of like 6 joints
Mm-hmm.
of this, and this, and then as we get down halfway, whatever, we'll reclaim.
Okay.
And so I know last year you had recommended that they buy a cover to protect that
Yes.
because it is a high dollar amount sitting out there in the
Those will
weather.
dry
So I
out.
do hope that they keep.
Yeah, at least put them in a shed maybe. The town of Waynesville, just as an example, in their inventories, it's over $600,000, and over the years, their inventory just keeps creeping up and creeping up and creeping up, and, you know, it is because well, unfortunately, a lot of it, I think, is obsolete. They bought stuff, overbought for projects, and now they can't use it. Can't turn it back in, and then they had a bunch of the PVC stuff that sat out in the sun, and some they had to scrap because you just can't use it if it's dried out. But they bought sheds too. That was one thing that, you know, we suggested a couple years ago. They finally bought some sheds, so that helps. So maybe just, you know, go along with that. Consider buying, you know, a shed to put over that stuff. So anyway, now onto the actual report or draft report, and we have
You can have that.
we have again issued, and as to reiterate again, so this report, when you actually do get the bound ones, it will be a little thinner than the past because it doesn't have that extra, the yellow book report, being that you didn't spend even close to $100,000. Now next year, my anticipation, and I think this is happening, this is crazy, and we've all seen Beth Wood on the news, right? She's the state auditor, the short-haired, blonde-haired lady. You know, talking about, and this is crazy to me because as the auditor, all my clients are getting all kinds of CARES Act money and ARP money, and whenever I ask, well, what are you allowed? Are you being told clearly what you can and cannot spend it for? You are.
We are.
You are.
We have drainage sessions every week about what we can and can't spend on both our CARES and our ARP.
Okay, and who's providing the training sessions? Is it coming through?
The North Carolina Treasurer.
Okay, so
Yes.
the North Carolina Treasurer.
So we know what we can do.
Okay,
Yes.
well, and so that's the gist of what Beth, the sounds like the news story is, that people are spending it and aren't spending it properly. And I have some clients who are, well, for instance, the town of Waynesville wasn't exactly clear initially. Maybe they are now. Maybe they've gone through
That's
some
true.
training. I think initially, because I haven't been to Waynesville to do that audit, and I was just in Woodfin last week doing their audit, and they are promised some money. They haven't really gotten it yet. But it sounds like a lot of people they're not really sure what they're supposed to use it for. So clearly,
They need to be very careful because they'll certainly have to pay it back.
yeah, let's pay it back. Or have Beth Wood come make it, you know, come visit and everything. So that's good that you're going to the training and getting clear, and knowing you, Sonia, I know that you'll keep detailed records of what all of this spent on, which is important because next year I predict that all the units that we audit will be in a single audit, where that means over $750,000 of federal and state grant money has been spent, which will require a federal single audit and maybe even a state single audit. And you guys for sure, because you've got the phase 2, I mean, I don't know how much you'll spend or you think you might spend. You'll definitely be in the yellow book next year. But if you spend more than $750,000 in federal money, CARES money, ARP money, that's all federal money. And then if you have any, is it CDBG?
CDBG sewer line.
Yeah, sewer line.
Yeah, I just got a $1.724 million grant.
Right.
Fixing it.
Right. But it'll be how much you spend. And now I guess the only thing delaying that will be that every contractor, you know, in the country's tied up doing other stuff. And I don't know how quickly these projects are going to be moving along. You know, the engineers, everybody is just crazy busy. And then you've got flooding and disasters coming our way here again. So, you know, it just makes mayhem. But I predict that all my units are going to be in single audit situations next year with all the money just pouring down, you know, but just, again, keep, you know, spend it how you're supposed to spend it and keep good records of how it was spent.
Yeah, that's one thing that seminar me and myself and Sonia went to. They stressed notes, and more notes.
Yes, yeah, documentation.
Documentation.
Absolutely. Yeah, and that's kind of the same on our end as auditors. You know, we're subject to peer review with the work we do, and the key always comes down to if you didn't document it, you didn't do it. You know, you're basically, you need to document it to comply and show, you know, proper compliance. So here in our audit report, we have, you know, the way it's laid out. You have your auditor's report, then the management discussion and analysis, And then we have our basic financial statements, and we have required supplement data, which are the pension schedules, and then the back schedules are the budget to actual schedule. And the last page of the report is the final, kind of a final on the North Carolina State Reserve Project, which is the Tallulah Creek Water Plant Improvement, that phase one, which is, I'm trying to think, I guess it might have been considered complete. No, it's complete this year. I mean, that was fuzzy to us last year, that loan money that came. I mean, but we deemed it finally this year. So on page 1, your independent auditor's report, again, we are issuing what's called an unmodified audit report. That's the highest level of report that you can achieve when you have an audit. It means that, we have no material findings that would cause us to modify our report or issue, anything other than unmodified opinion. So congratulations on, again, getting through your audit with an unmodified. It used to be called unqualified, now the terminology is unmodified. Then on page 4, we have the management discussion and analysis. And a lot of this is, I put together comparative tables from prior year to the current year, but then kind of the financial highlights, Sonia being, management, and actually this is your opportunity. The LGC even, points out that this is the unit's opportunity to point out and highlight what happened at the unit during the current year. So the MD&A financial highlights, we kind of just talk about liabilities, assets over liabilities, and this went up and that went down, blah, blah, blah. But we do kind of, toward the middle of the bullet points there, talk about how your, your unassigned fund balance is over $1 million, or 223% of general expenditures. And you know how the LGC is always fixated on, meeting fund balance requirements. Their minimum's 8%. Well, you guys obviously are blowing that out of the water. I mean, you're way over.
For the general
fund, right? For the general fund. And then your debt is going down. You haven't taken on any new debt. Actually, there was the $20,000 of what we deem new debt, just to finish off the Tallulah Creek project. But overall debt decreased because you're paying down, your debt in excess of any new debt.
And the wonderful thing about that $20,000 is it's 0% interest for the next 20 years. So we did kind of go into debt, but we're not going to be paying interest. So that's nice.
Right. Yeah, and certainly the amount of grant money you received was worth it for that little bit of debt. We talk about COVID-19, and this is one thing that's kind of crazy to me about COVID. Last year we had in the financial statements in the subsequent event section, talking about COVID-19 and the effects on, for some nonprofits and some clients, it is devastating. It's very impactful to the negative. But in most towns in here, rural North Carolina, it's like everybody's, traveled here to get away from bigger cities, and you've seen sales tax increase. It's actually had a kind of opposite than what we would have maybe expected on the early end of the COVID-19. So, it affected maybe, we said it affected water and sewer revenue because, late payers or people were given, an opportunity to, 90 days or so? Not pay for 90 days.
And no late fees and no shut-offs.
Yeah, which, I don't know. I'm not sure if that was good or, that probably wasn't really good, because then people, when the restriction was lifted,
they still owed the money.
They still owed the money, and if they couldn't pay, they got shut off. So that probably wasn't smart on some people's take on taking advantage of that. But anyway, so, and I'll get into actually COVID-19 and its benefits on sales tax. We don't really talk about that here in this management discussion analysis, but you'll see it when I look at the budget to actual reports. And then we just talked about how the Tallulah Creek water plant was completed. We didn't say in service, we took that out of there. And then the last page of the MD&A on page 11, we talk about economic factors and things happening next year. So kind of a repeat there of that COVID-19 comment. We also mentioned how you didn't change water and sewer rates. They've stayed the same. And that the tax rate is remaining at 60 cents per $100 evaluation. So that's really, nothing. I think in the prior years we had a little bit more to say in there, but really not a whole lot going on this year. All right, and then starting on page 12, these are what are called the basic financial statements, and these are on a full accrual basis where I take your general fund, because the water sewer fund is on full accrual basis anyway. It's a proprietary fund. It's in the business to make money by selling water and sewer services. So that fund's already considered fully accrued, where you have the debt on the books, you have the assets on the books. The general fund, is a little different because the way that works in everyday life is it's on a budgetary basis. When you're buying assets, those are just, capital outlays, expenses going out the door, you budget for it, all that stuff. So Exhibit 12, not to really go over it in great detail, but it's a conversion to match, say, how the water sewer fund, or what you see that column called business type activities, is accounted for. And, this isn't really how you all analyze your expenditures on an everyday basis. So this is great for all the bonding people or if you're going out for issuing debt, how the banks would look at this. But I'd say for everyday general purpose, this is a little overkill for, your typical board. And it takes me a whole lot of work to put this together, and it's something that I'm glad everything ticks and ties and balances out. But the basic financial statements then run through page 13, 14, and 15, 16, we reconcile that full accrual back to the budgetary basis. 17 shows us kind of our original budget to what we had final budget. And you amended your budget, I forget how many times, was it 11 times? It's in the...
Would you say it again? Say that again.
11. Did you how many times did you amend the budget?
Oh, amendments. Ooh.
Was there 11?
11 sounds...
I want to say 11, and it's in the MD&A buried in there somewhere. But I guess, that sounds like a lot, but that's good. You guys are, Sonia's doing her job, which is to make sure that spending of any kind has been approved before the check is written. That's the state statute. And a lot of units don't do that. They might have one budget amendment because they don't do any all year long, and they get to the end of the year and say, oh my gosh, we're way overspent. And okay, technically, from an audit point of view, we bless it and say, yeah, okay, they weren't over budget, but that's not really the proper way to run your government. When you are about ready to incur an expenditure that's not in the budget, technically you really need to have board approval before that expenditure happens. And that's what you guys are good stewards of looking out for and making sure that spending is properly approved before it happens. So, and I guess the LGC likes to see the original and the final to see how much things changed. Starting on, let's see, page 21, we have the notes to the financial statements. There's really nothing new other than, like I was telling Sonia, the only thing, the City of Dogwood example, that's the guide that I look at when I'm finalizing an audit report to make sure that I've made all the changes the local government has changed. And this is probably partially why the rate on the North Carolina Capital Management Trust Fund plummeted. They used to have two portfolios, a term portfolio and a government portfolio. And they did away with the term portfolio, and now they're just the government portfolio, which is probably just U.S. Treasury paying zero opposed to it. So that rate, like at my town of Woodfin, last year they had made $25,000 on North Carolina Capital Management Trust and $500 this year.
I know.
Isn't that great? So you basically are making zero on that money. So the footnote changed on the deposits where we talk about and reference the North Carolina Capital Management Trust because they did drop the term portfolio, which must have been the one that was making all the money, and took that away or just did away with it. Maybe it's too risky, would be my guess. So the footnotes really are all the same as last year. We get into the pension. for what it's worth to you, your overall pension liability, which is, let's see, the total pension, it's been creeping up for everybody. I'm guessing that's partially related to the market, but your pension now townwide is $222,000 and change, up a little bit, but everybody's pension is up. And I would say the most meaningful data comes on let's turn page 41. Sorry, I'm gonna get myself there. Page 41 is our general fund budget to actual, how you see it month to month when Sonia presents the financial data to the board. And you'll see that, taxes, collections on taxes, we'll get to the collection percentage page, that's at the tail end of this report. But taxes, the county's been collecting taxes, they're doing a great job. You budgeted $302,000, you've actually collected more than that, it was $332,000. The next section, unrestricted intergovernmental, you got local option sales tax and utility sales tax, and that's way up from prior years, just so many people flocking to town, the small towns, and buying things, and that's helping boost the sales tax that you're being doled out from Raleigh every month. Power bill's about the same. Investment earnings are really down quite a bit. I think it was several thousand in the past, but now we're down to 446,000. So total revenues of a little over $600,000, and then our expenditures. We didn't have a whole lot of change here in general government. Mayor, aldermen, pretty much all the same. Parades were down a little bit, but that's understandable with COVID. Finance, salaries and operating expenses were pretty standard, pretty much the same. And as you can see, let's see, the general fund has no debt, so there's no debt payments here in your general fund. Economic development was a little bit down again with the COVID going on. Transportation and streets were similar to the prior year again. Everything's under budget, everything's been properly approved. And overall, your net change in fund balance there on the bottom line, you've added $109,000 to your fund balance. So your fund balance is very healthy in the general fund. And then on page 44, sorry it's so tiny, it's smaller and smaller every year. We'll add lines to it. I actually have to use my magnifying glass to see this. I should have brought that. But so here's the water sewer fund budget to actual, where you have your water charges, water tax, sewer charges. You're a little over budget on that. I mean, your revenues were over what you anticipated, which is a good thing. And then we have, our expenditures by department. We split this out like this because the USDA was requiring it after that grant. They wanted to see sewer operations separate from water. Luckily, they didn't require a whole separate fund, but that's why we break out water admin, water treatment, water plant. Then we get into the sewer admin, sewer treatment. We do our best every year to kind of allocate. We've come up with a methodology, Sonia and I have, or actually I should say Sonia, because we've got, say Sherry, whose time is split between the general fund and the sewer and just other various people who work water and sewer, and we allocate their time based on a best guess scenario. But I think hopefully the USDA will be happy because you can see the sewer fund. Well, if they were to calculate it out, I think I calculated out that the sewer fund is kind of holding its own. It's close to it. It really, in the past, I think they were, I don't know if they were worried about it, but that's why they want this broken out so they can assess, you've got sewer charges of almost $360 along with taps and other stuff. 360, 370, almost 380, and then you've got 380,000 coming in, and then you've got outgoing of sewer admin, 34,000. The plant maintenance, 231, that's 260. Okay, and then you got debt service, so we've broken out debt service, principal retirement on the sewer, and then interest and fees on the sewer. I guess actually those are kind of higher than the revenues coming in, but
It's that debt.
yeah, that debt is what,
And I'm sure that's why USDA wanted to make sure we'd be able to pay that debt off. That's why they asked us to break it out.
yeah, and I don't know, if they come back at some point and give feedback. Do they ever give you feedback?
No,
Because I know they are looking at
they are
things,
looking at it, yes.
yeah. And then but the good news is overall, even on what I call the budgetary presentation, which is sort of like cash in a way, you still had revenues in excess of spending of $116,000. So that is a positive thing. And then the reconciliation at the bottom there shows that, we pull out the principal on the debt because that is more of a balance sheet thing rather than expenditure, for profit and loss purposes. But I do like to see that, you are paying money out when you pay principal on debt, but your addition to cash was still a positive number. That's a good thing to see, a positive figure here in this budget to actual. But then the reconciliation at the bottom kind of converts it back to full accrual, adding back the principal on the debt, subtracting out depreciation, which depreciation, a lot of times you'll think, oh my gosh, my water sewer fund did terrible. Well, the reason it'll look terrible, so to speak, with a net loss is because depreciation, which is a non-cash type, entry, yes, you bought assets at one point in time, but that usually is a pretty large number, which can send the bottom line looking negative pretty quickly. So, and then all the rest is kind of payroll and pension type stuff. So yeah, so your change in net position was a negative 324,000, but the majority of that is depreciation. So, this is a nice schedule to look at, and the water sewer fund combined is covering its spending, so that's a good thing. The sewer on its own, I don't know if that's something to look at and increase sewer rates at some point. Probably not popular in an election year to want to do that, but just pointing that out. And then the page 45 shows the Tallulah Creek. Really, this is capital projects, but the only thing going on this year was Tallulah Creek. We've had years where, there's been so many things going on, but it's funny this year, the one project at Tallulah Creek being completed, and just a minor bit of activity this year to finish that out. But this schedule won't go away in the future, but we won't have Tallulah Creek on there anymore. We'll have the infrastructure improvements with the CDBG for water sewer lines and anything else that you're constructing, which I think that's the only big thing coming down that.
We're hoping that Little Creek is going to be on there.
Well, I mean,
it won't next year.
Well, that particular grant is done. That project.
That first phase of that plant. That now we're working on phase 2 of the
Right.
same plant.
Yes.
So,
Yeah, so this schedule will be no more phase
Yes.
1, but
Yes.
phase 2 will be on there. Is kind of what I wasn't clear when I said that. Then on page 46, we have our ad valorem tax schedule, and your I think just probably the biggest thing to point out here is just that your uncollected balances, are kind of, I'd say this year the county did a really good job collecting this year. The current year balance of $7,499 is pretty low compared to other years, and kind of oddly, the year prior, you still have about the same amount outstanding. I don't know how they do it collecting some of those old years, but I was impressed to see that the current year uncollected, the current year taxes was down quite a bit from prior years. And on page 47, where we actually show the collection percentage, your collection percentage, excluding motor vehicles, because that's considered 100% now that it's tax and tagged together, but your property excluding motor vehicles, is 97.53% as a collection, which I think is pretty good. It's actually, I think, below the statewide. I think statewide is 98%. If I looked at Dogwood, I don't have the Dogwood sample with me, but I want to say that that percentage. But you guys are coming along. I mean, you're in a rural county, and it's improved from the days of old where you
3
collected.
years ago, it was at 85%.
Yeah,
Yes.
so it has come up substantially. And then the last page is just, again, a reiteration for the purpose of, DEQ, and I just thought about that. I guess when we get these done in final form and I get you a PDF, I'm sure the state will probably want a copy of your audit report, as will, I guess, USDA. Do they ask you for that ever? Or, so we'll get those to them when we can finalize this out. So anyway, that's your audit report. Does anyone have any questions or anything?
We do appreciate you.
Well, thank you. Yeah, and we appreciate coming out here to Robbinsville. Like I said, it's probably one of our more despite having to kind of be out of town for a week or so, it's it's a pleasure to come here and have a great work environment. Sonia and Sherry and you're here and very helpful during our audit. So and to have clean books and. I think Roxanna was just so impressed. She'd have a question and boom, you'd run and get the answer and come right back. And believe me, that doesn't happen.
Well, one main thing, and I say from a board, we don't have that in the way.
Mm-hmm.
Whenever you start hiding stuff, you get in trouble.
Right.
I boasted up if anybody comes in. I mean, it's public record. And the state and federal side of it, dealing with money, you will balance that last penny.
Mm-hmm.
You wouldn't, and it's not maybe, it's you will.
Yeah. Oh, yeah.
And we got a good staff and everybody don't know something, but we can get our minds together, and we know no phone numbers we can call and get answers to what we might not understand.
Right. There's benefits to being in a small town and not having to deal with layers of bureaucracy or having to. It's so funny because when I was at Woodfin last week, they have a new finance officer, and she's come from Buncombe County, and the finance officer at the town of Waynesville, she was new last year, but so she's in her second year now. She's come from Buncombe County, and I think everybody's left Buncombe County in droves to get out of there. I mean, after the whole Wanda Green, thing. I mean, what a mess. But anyways.
Well, it's Mr. Mark. How's his health and everything? He doing good?
I think it's funny. He's functioning decently. I mean, he's a little shaky, but I said to him, I can't just see 12/31 coming along, December 31st, and you walking out of the door and not coming back. And he kind of, I know the man loves what he does. He's so smart and so knowledgeable, and he kind of admitted, he said, yeah, I probably will be here and be around so I think he's not going to work a tax season like normal tax seasons are, but I suspect he'll be in the office every day, at least working. He's in at 6 a.m. now every day. He leaves about 3:30, 4. He leaves a little early. I think he's just tired, and I don't know if he's on any medication, but I suspect he will be doing quite a bit of 40 hours, at least close to 40 hours during tax season. We kind of need him. I mean, I don't know how Bruce and I we haven't figured it out yet. So, but I think luckily Mark will still be health, with his health is holding up to keep him coming back. He'll be coming back.
So now this here is the draft, and you're waiting on some stuff coming from.
I'm waiting for the local government
and then
commission.
We'll get the final.
Well, our firm will bind these up for you, but I have submitted this. I've submitted the tourism 3 times now. The LGC has a new portal for uploading reports. and invoices, I guess. And they were delayed in getting this new portal ready. So I uploaded both the RTA and the town's reports on the old portal, because you were still able to use them, from what I could tell. And then I had this lady, Rita from the LGC, emailing me numerous times. They have this spreadsheet that I have to fill out. It's your unit data spreadsheet that, that reminds me of your AFIR. I need to ask you about that. But they have a unit data spreadsheet that the auditor and technically Sonia's supposed to fill it out, but I kind of filled it out for you. I put your name, your email, the date. They want to know the date you were brought in as the finance person and blah, blah, and all the financial data, which is sort of just a summary of things that are in the report. Well, I've submitted that 3 times because Rita kept saying, oops, we had an error in our spreadsheet. Here's a revised version of that. I need you to fill out the revised version. And then, well, that one had an error and I got it again. So they got something going on. I think what's happened is people have left the local government commission. I mean, they have attrition that sounds like it's really, buckling their ability to get the worksheets out, and their portal, their new portal was delayed, and so then when the new portal was up, they said, okay, nobody's allowed to use the old portal. We all got an email, and I uploaded everything again, both the RTA and the town, to the new portal. But then what happens, someone at the LGC needs to look over the report and get back to me and say, it looks good, you're good to go. And that's what I'm waiting on, to finalize this and bind it up and get you good copies. I can't imagine they're gonna have, if they have any changes, I don't even know what they would be. I mean, I kind of compared it to the dogwood example, and it looks adequate to me. But,
And she will bound them and mail them to
yeah,
us.
I'll bind them up and mail them, and I'll also provide a PDF copy, because I have a PDF kind of ready, but it's the one I sent to the local government commission, and I don't want to send it to you because if they change anything or want me to change anything, I'll have to change a page or two and re-upload it, and I want to give you the final version of that, so I don't have that, what I would call final. But when I do, I'll give you both the town of Robbinsville in bound version. We'll mail those. These letters are good. These letters are good and final, so don't throw these away. You can keep these. And I'll also send you PDFs.
Well, thank you.
Yeah, thank you. Appreciate it.
Does any of the board have any questions for Nancy? I'll entertain a motion to close this special board meeting of Town Rock.
I second.
Okay.